All down. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
G'day, Peter, and welcome to Current Market Insights yet again.
Thanks, Ciaran. Good to be with you.
Always good to see you, mate. Look, we're coming toward the end of the first quarter here in real estate in Sydney. Thought now's the perfect time for us to do a bit of a market update, see where, what the market's looking like, what the open homes are like, and what your experience is on the ground week to week as an agent in the Inner West.
I think the property market surprised everyone in the Sydney market on the upside, Ciaran. I'm hearing across the board that agents and vendors are pleasantly surprised at how much buyer activity there has been in the first quarter. And we put this in context that there has been 2 interest rate rises in the first quarter of 2023. But remarkably, I think most agents would agree that in inner city Sydney, eastern suburbs, North Shore, the market's probably slightly better or slightly stronger this quarter than it finished 2022. So it's been a really good start, surprisingly a good start.
So do you think that strong start is reflected mostly in the number of buyers that are coming to open homes across the market, or is it being reflected in the prices as well?
A bit of both. There's no doubt that inspection numbers are up, and I've seen some really strong sale prices across the board again to begin the year. The rental market has continued to rise. The RBA are beginning to suggest that we may be looking at peak interest rates. The retail banks are acutely aware of the mortgage cliff that's coming up, and they will deal with each case as best they can. So I think there's a sense in the marketplace that rents are high, prices have come back a little bit last year, closer to being towards fair value, and the RBA is not looking to crunch the market. So all of that has come together to create a pretty good operating environment.
Do you think that's indicative of a good time for people who are potentially looking to sell to start thinking about really moving into the market now?
Well, look, the final factor that I should add as to the market strength so far this year is a lack of stock, Ciaran. So sales volumes are well down, and nobody really knows how the market would perform if it were hit with a doubling of stock. And I say a doubling of stock because stock levels have halved in the first quarter of this year as to where they were late last year. So the auction clearance rates that were reported last Saturday, for example, being the 11th of March, there was 256 sales reported as of Saturday night. Now, during a normal market, you would have at least 800 sales on a strong auction weekend. So you can see there that the volumes are down, but the prices that the respective properties achieved were quite strong. So I think it is a good time for vendors to take advantage of market conditions, which is something that I wasn't expecting to be saying in mid-March 2023, but that's how the market's playing, and markets do what markets do.
Oh, absolutely right. Earlier in the year, we talked about the impact that interest rates were having on the buyers that we were speaking to. As you mentioned, the RBA's kind of hinted that maybe we've reached peak rates or we're close to it. Are you starting to get feedback from buyers, as you meet them at open homes, that they're feeling a little bit more confident? Obviously, they're coming out in greater numbers, but are they actually feeling like they could comfortably make a purchase now?
I think the confidence from buyers is coming from the fact that the market has stopped falling. So CoreLogic reported that the Sydney property market rose modestly, albeit, but rose for the first time in 12 months in February 2023. And buyers were seeing that right through February, that bidding was spirited. We sold a property here at Harris Partners last week where we received 8 bids in 8 days on a home in Balmain. So buyers are definitely out to play, and I think buyers take confidence in seeing that others are prepared to perform in the market, and we may be reaching peak interest rate and bottom of the cycle.
Do you think that's indicative that buyers are more concerned about the impact of rates on their own money, or are they more concerned about, FOMO? Are they concerned that the bottom's come and they don't want to then miss out on what's going to be a rampaging market again?
I'm not sure if FOMO is driving the current buyers in the marketplace as much as there's a sense that, as I say, interest rates may be peaking, the cycle may be bottoming out. Nobody really knows where the bottom or top of any market cycle is, but there's a sense that we may be looking at it. And the lack of stock, the ability of vendors to hold on during this rising interest rate environment has shown buyers that if they do purchase a property, they're not going to buy a property that suddenly drops in value by 20%, as some scare campaigns have suggested was going to happen in Sydney over the next 12 months. There's nothing to suggest that is going to happen based on what we're seeing out there on the ground at the moment.
Absolutely, and it's certainly a good good reassurance for anyone who does have property and may need to sell or is looking to make a bit of a change that in fact it's nowhere near as desperate as we thought it may have been, this time a year ago.
Any vendor that's gone to the market so far this year is pleasantly surprised with both the activity and usually the bids that come in.
So in terms of activity, one of the things we talk about quite often in a sales campaign is, the amount of time that it takes to sell a property. Do you think, given that we've had this renewed interest now, vendors, I guess, feeling that, a little bit of patience with their property is going to yield them the reward that they're after?
We're still not advocating that message because whilst we've outlined why the market is performing pretty well at the moment, Ciaran, buyer depth or market depth is still shallow compared to what it was during the boom, say. So what a vendor must keep in mind is that majority of the best buyers in the marketplace will be active and will be through their home in the first 14 to 21 days, if not sooner. So there's no real intelligence in coming into a campaign with a 90-day campaign mentality when the best buyers are going to turn up in the first 14 to 21 days. So as best we can, it's not resolute that one must sell in the first month of the campaign, but as best we can, that's how we're trying to structure our campaigns, because there's a reality that in 95% of cases, the best prices happen early in the campaign, not later in the campaign.
Yeah, of course. Again, earlier in the year, we've talked about the different types of buyers that are in the market at the moment. With the numbers increasing week by week, are you seeing a bit of a shift? Is it more investors starting to come back out? Are the first-home buyers getting a little bit of confidence? Again, I know, only just the other week we spoke about first-home buyers maybe lacking a little bit of confidence at the moment. What's your experience of who the main buyers are at the moment?
I think the new entrant into the market this year is actually Chinese buyers, overseas investors, expats bringing money back home. That's what I've seen a lift in a noticeable fashion. First home buyers have taken note and interest of the New South Wales government's annual property tax, no stamp duty payable up front. That's played a role. But I wouldn't say that first home buyers have flooded the market yet, even though some are looking to escape the rental market. They're probably hanging on to see if Labor win the state election on March 25, and again, Labor have a different policy that we've discussed in the past to the current Liberal government. So yeah, and then I think the other big trader in the market is people who just, for whatever reason, need to upgrade or downgrade their current property.
I'm glad you mentioned the Liberal policy and obviously Chris Minns' counter policy. Do you think that politics right now, we're in the thick, really, of an election cycle. It's about to hit. Do you think that politics is playing a role in the nature of the kind of people that are out there at the moment, aside from, the first-home buyers that we just mentioned?
Other than for the odd first-home buyer, no, I don't. I think this has been a fairly underwhelming campaign. I don't think it's captured the public's imagination. There's too much going on with the whole interest rate story and what else is going on in society at the moment. So, yeah, I would say from both sides, it's been a campaign that's struggled to capture people's imagination or attention on the whole.
I'd have to agree with that. I probably the first campaign that I really am not as invested personally either. I don't feel like there's any message out there that's particularly strong.
That's right. And I don't know if that's a function of how we absorb news now, whether we're disconnected from the television. I barely watch TV anymore, for example. So if you are a political party, how do you get at your constituents? What's their preferred medium of taking on information? Maybe there is a strong campaign being run out there, Ciaran. We're just not exposed to it. I don't know.
Maybe we're just getting old, Pete, and we're missing the messaging. You touched on briefly just before that there's still, I guess, a bit of uncertainty in the rental market. Any idea of what is happening at the moment in terms of rent? Are we still seeing, these kind of what I would consider fairly rapid rises week by week? Are we still seeing really strong rental or tenant numbers turning out for inspections?
Still upward pressure on the rental market. The issues that caused the rental crisis haven't gone away. They're not going to be fixed quickly. And while ever the federal government says that we need to bring in a higher population into Australia to fix the labour squeeze that a lot of small to medium-sized businesses are experiencing, those people, by and large, are going to land in Sydney and Melbourne, and they're going to land in Sydney and Melbourne and need a rental property. So I don't think that issue's going away. China changed their rules for university students that for the degree to have merit, it must be in-house learning now. They can't do it over the PC. From home, so that's caused a lot of international Chinese students to head to the international universities, including Sydney. And I know that whenever we put a property up for lease around Glebe, Annandale, in Newtown, it goes really strongly and goes above expectations.
So you mentioned that there's a resurgence of Chinese investors and expats coming back into the property market in Sydney. Do you think those purchases can have any impact on easing the rental stress?
No, look, the Chinese money that we're seeing active in the sale market is people looking to buy up at a higher end properties for themselves. So I've had a couple of people in the car recently from mainland China, but it's a property they intend to live in. So, they're flown out from Shanghai, for example, for a few days to buy a property in Sydney.
Yeah, so absolutely unfortunately no benefit for the renters out there, but certainly good for the market in Sydney as a whole.
That's right. Look, I think there's a lot of talk about landlords and the role that they play in all of this, but it's not up to private citizens to create subsidised housing for tenants. The government at all level need to come together, federal, state, local, need to come together to fix some of the issues causing the rental crisis, and that's not happening at the moment. And there is not one reason as to why the rental market is in crisis mode. Therefore, there's not one solution. It is going to need all forms of government coming together with a holistic response to what's going on at the moment, the least of which is we need more development, creating more dwellings if we're going to invite 300,000 people a year into the country. And I'm just not seeing a quick turnaround for developers who do want to build more dwellings for the marketplace.
As we've spoken about at length before, there are certainly plenty of issues in the rental market, and I encourage any of our listeners who are interested to go back and have a listen. A few weeks ago, we did a bit of a deep dive on this. I wonder, Pete, a bit of a left field question. We've been hearing this week, or in the last week or so, a huge amount of rumblings in the US of bank closures and failures across the financial markets. I only heard of another one this morning, so not Silicon Valley. There was another bank went down this morning. Given that our economy tends to bounce off the back of the US economy, do you think that we're likely to see any flow-on effects here that will have an impact on property?
Well, look, as we're recording this, the money markets seemed appeased by the US government's response to what's gone on over the weekend. But by the time people are listening to this podcast, it may have changed again. Clearly, there's some structural issues there. It was all related to crypto and venture capitalist funds, whereas the Australian Big Four banks are really tied to the residential housing market in a greater way than speculative venture capital funds and crypto. So you wouldn't say that it couldn't spill over and contagion couldn't take place, but certainly the money markets, which are the best judge as to whether a response is appropriate or not, has been that they're pretty comfortable at the moment that this is not going to go further or somewhere where no one wants it to go.
It's probably a good thing. I don't know that anyone anywhere wants any more unexpected surprises in, particularly cost of living. Look, I guess before we kind of wrap up today, Peter, is there any sense, I guess we've touched on quite often this year about how it is, the interest rates are having a role, and we've said the RBA's indicated we might be at peak. If that's not true, and come April the Reserve Bank decides to lift interest rates again, do you think that it's going to change what we're seeing on the ground here, or do you think that sentiment will still hold, that we're pretty close to the end and people are starting to feel more confident again?
Well, what's interesting about the two interest rate rises this year, it's the first two of the interest rate rises that have not pushed the market lower. So up until the end of last year, there was a direct correlation. The RBA would dial interest rates up and the property market would pull back by a proportional amount. That has not happened this year, where there's now a dislocation, where the market is resilient of the last two interest rate rises. I'll go out on a limb and say the RBA won't increase interest rates in April. It's the first month, if you look at the mortgage cliff graph, where you will see tens of thousands of home loans refinanced, in combination with the US banking issue that you've just raised, and the fact that the RBA had a different tone after their March meeting to the February meeting. I think the RBA would be smart enough to know that it's wise to hold as we come into the April meeting.
No, we can certainly hope so, and I think our buyers would definitely appreciate that, and any of our homeowners who are potentially feeling stress. I guess then final question, Peter, we've talked a lot, on the podcast about the link between inflation and property prices. Given the interest rates are likely at peak, what are you seeing in inflationary figures at the moment, and is it looking positive for the market more broadly?
There's a sense that inflation has now peaked, and they're starting to break it down, both here and in the US. Other countries will continue to have outbreaks of inflation, but I think the RBA are having and have had the impact they wanted to. And there's some smarter people in the markets than I that are suggesting that rate cuts are not too far away if the economy does hit the rocks in any fashion. So, yeah, the RBA can dial rates up, but what everyone seems to have forgotten through this is that if things take a nasty turn, they can always dial them back down. That's how floating markets work.
Absolutely, absolutely. Look, I thank you for your time today, Peter. I think this update really has showed that there's a lot of resiliency in the property market in Sydney, and people are starting to realise that we may have seen the worst of it, and hopefully there's a brighter year ahead for the rest of us. Indeed. Thanks, Ciaran. Thanks, Peter. I'll see you next time.
Cheers.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.